back from that.
He responded to me, I think, yesterday.
Yeah.
So I know it was on his radar.
Well, that's
Lori,
again.
how are you doing?
I'm doing great. I can't believe there's not more people on here. I think this is a cool topic.
I know. Well, there were, and we had a lot. I don't know if it was just I should have done my video 3 days ago, or if everybody's just really busy or what, but I think it'll get a lot of play, even if we only have a few of us on and it's recorded.
Yep.
It is. I mean, I would say this is the number one question, when you have investors reach out to you, that's what they want to know is how do I get financing? So,
yep.
How's business?
Good and frustrating, like everybody else's. It's, nice to have clients, but not if you, continually drive them around and show them things and then they get their hopes up. And then, I mean, some of them are like, should we just rent? This is so frustrating. I'm like, I know, but I don't know. I don't know what to say.
I know. The
He should be coming on.
Okay, cool. Yeah, the biggest challenge right now is just that, I haven't heard anybody say that this is something that's going to go away anytime soon. So it's like, at some point, it's if you're going to live there, you're just going to sit in your rental and watch prices and interest rates go up. I don't know that it's going to do you a ton of good, but.
Yep. Yeah, that's what everybody asks is, like we know when the tide is going to turn and, things are miraculously going to change.
Yeah. Mike needs to sell some of those rentals that he's got,
Ooh.
No, I think
I'm
it's pretty good on
I'm
the
a buyer
rental side,
holder.
too.
I have sold though. I've sold a few. When it was advantageous to do so. And that's one of the things I've always have told people is never fall so in love with something that you can't let it go when the stars align the right way. And I've been pretty fortunate. But for the most part, I'm a holder. Once I buy something, I don't let go.
Yeah, the problem with that is, right now there's great equity sitting in some of these rental properties because I have a few too. But even if you sold it to get the equity out, there's nothing to buy. I mean, everything is so, overvalued, it seems, in the family space too. So I couldn't replace what I have with something, even at the price of what I would sell it for. So then it's, it just doesn't seem to make sense.
The non-investor thinks about the cash equity and you think about the money that you make every month off of it. And it's like, what do you do with that money? There's nothing that's going to bring you that return right now to invest in. And then obviously on top of that, you've got capital gains. Like, it's not like you get to take all that money. And if you can't buy anything, you can't do a 1031. So it's just like, yeah, it's a tough place right now.
Yeah, I got caught not being able to come through. But I knew that there was a chance that was going to happen. But that's a tricky thing. I've got people that wanted to do a 1031, but what they were smart. They picked 3 different places. So they picked Columbus, Cleveland, and then down in Florida, just to cover the bases. And yeah, you get caught with a 1031 and you have no place to go. I mean, they really should change it, and they should give you 180 days to locate it, and then 60 days to close. Yeah. The problem is they give you 45 and 180, and that's almost just not enough time.
Yeah.
It's especially with most 1031s, you got to go up and over. And that was the other problem I was having, was where I had to go, I didn't want to go, at least at that time. Now, maybe now I think differently, but at that time I had kids looking at college, and I'm thinking, I'm not going to blow your college education because I just made your college education off rental property. So
Yeah.
Someday I'm moving in with them, so it doesn't really matter. It's all good. If not them, then I move in with Kyle. Hey, got a new trailer yesterday, Kyle. Woohoo! Yeah, my wife wanted a new rig. So I got that sitting in my driveway I got to deal with today.
Rough life, Mike.
Well, luckily she was the one writing yesterday's check out of my checkbook, but she wrote it. Well, that's the thing though. I mean, that's what life's about is, if you just work and never get a chance to really enjoy it. And that's our one hobby. For my wife and I, we've been camping for over 30 years, but the last 13, 14, we've had trailers. So supposedly this is our last one. I've heard that before. We'll see. I don't know.
Nice. Well, yeah, you always have to have a reason to do it. Otherwise, what's the point in going through it? I mean, it is kind of fun, right? But
yeah, I still tent camp, but my wife can't do that. So she likes more comfort. So people tell me I have a disease, and they're probably right. I don't know. But
well, Kyle, I appreciate you jumping on. We're a little light on attendance today.
That's fine.
It's partly just that it's April, so
Sure.
we're recording it though, so I think we'll get a lot of play on this because this is a topic. I think last time we were on, a lot of people were asking questions about this.
Yeah, I think it was something new to them, that there were options outside of the traditional model.
Yeah,
that was kind of a surprise.
So I think we'll get a lot of play on the YouTube channel with this, with our agents. So yeah, I want to respect your time and if you're okay with it, we'll keep going.
Yeah, absolutely. Well, first of all, most important, I missed the very beginning of it because I was on a Google instead of Zoom. 2021 problems, I guess. But Mike, did you get a new camper? Is that what I heard?
Yeah.
What'd you get?
A Montana.
Nice. My neighbor has one.
So it's leaving here in a little bit, heading to your house. I'm coming down.
Nice.
No, I'm teasing.
All right. Yeah.
I'd like to.
Yeah. Yeah. My wife and I are looking at some stuff, and man, the Grand Design's got some good reviews out there, and Montana's on our list also for the next one.
Yeah,
so,
they're crazy.
We glamp. So yeah, we're doing the whole Grand Canyon and Utah in 1st of June.
Yeah, there you go.
So the questions popped up on like, how do you fund these rental properties? And I can only speak from my experience. There's people out there that are way smarter than me. There are people that have all these fancy licenses and all that, but all I know is how to get deals done. And I've kind of reached in every direction to get deals done, not just for me, but for my clients too. So let's see if I'm able to share a screen. Let's see if this works. Are you able to see this?
No, I need to make you a post, I think.
Okay.
I just did. Now did the screen share pop up?
Let's see. There we go. And share.
Yeah, there we go.
Okay, you got it? All right, cool. So I just do kind of what I have in my head onto some notes. I hope it makes sense. I hope y'all have questions so that you kind of understand what I've done. Because when I first started getting into real estate, I just thought I had to go to Huntington National Bank or Bank One or Wells Fargo to get a mortgage. And it took me a little while to understand that. And I've heard all these stories about all these people that have private money, or they've got these loan shark, hard money lender people. And, all I know from that is watching gangster movies that you don't want to borrow money from people at high rates because they come break your kneecaps. So I never did it until I met people that were actually doing it and were successful. And I knew I could trust who they were going to off of references. I didn't have any references prior to that. So I'm just going to kind of show you what I've been doing, and it's completely doable in Columbus, Ohio. Not a problem at all. So, I mean, we already know the conventional options. That's where somebody goes and buys a rental house. That's your Fannie Mae, your Freddie Mac. You're going to get the best terms. You're going to have to pay. You're going to get the best terms of all the options, but there are some downsides. One is you're going to have to put it in your personal name. At least that's been my experience. There may be some options I'm not aware of. You're going to have personal guarantees on it. The underwriting is the most strict. My personal situation, I've had challenges getting conventional mortgages through the Fannie Mae, Freddie Mac, FHA options. Just I think when your tax returns beyond 8 pages, they just forget me and go to somebody that's really super easy. And I think that's kind of what most of our clients have, or they have complicated situations where they're writing stuff off and they've got all these other expenses and income. And then, these underwriters that work at Wells Fargo, they got this little check box and they just check. You don't fit it and they just throw you out. So this hasn't worked well with me for the last couple of years. They do have, and I'm sure y'all have heard about this, limitations on the number of loans that they can do through the government programs like Fannie Mae, Freddie Mac. I think it was 10. They may have reduced it to 5. I know some of the originators have even had limitations on what percentage of their portfolio they can lend out to investors. I guess that's hedging some risk of theirs.
Yeah,
I'm sure there's a lot of political reasons too.
Yeah, I can add something to that just because I'm actually in the process of refinancing a bunch of my rentals with conventional. And yeah, a couple weeks ago, a rule was put in place at the end of December, I think, or made the recommendation that Fannie Mae and Freddie Mac keep lenders' investment properties and second home percentages of their lending portfolio below 7%. And so the interesting thing about that was the second home part. And so one of the theories I have, which I have no basis other than just anecdotal, is that this is one way. I mean, second homes and investors have been a big part of the market here, especially in the lower price ranges. And so I'm wondering if it's not going to make a huge impact on the market, but I wonder if it's the government's way of just trying to slow that down a little bit and open affordable housing back up to owner occupants.
There's a lot of things that have changed in the last 2 years as far as how the government works with the mortgage companies. Back in the day, these loans were assumptive that the government would back them when it all goes to hell, which it did. And from my understanding and what I've read is the government actually buys these loans now when they used to not actually buy them. So it's basically been just an open checkbook for originating. They put more criteria. So when you open up the government getting involved in things, they have their own
agendas.
What they want. Yeah, they have their own agendas, whether it's good or bad or ugly, doesn't matter. It's just that's their agenda. Now there are some brokers that I've had good luck with. Rate.com. I've got a buddy there that all he does is investment loans. I think he's like the number 4 guy in the country with Rate.com, and he's done really good on investment loans. I asked him the other day if that change has bothered him. He's like, not one bit. But maybe that's because his portfolio is that 7% that his coworkers aren't writing.
Yeah, the thing that I'm working with a broker, and basically the different lenders, depending on what their portfolio already exists, are being impacted differently. So like Huntington Bank, for example, they completely suspended all investment property and second home loans. Like you cannot get a new loan right now from Huntington because they're too close to that threshold. And apparently if they go over that threshold, Fannie Mae and Freddie Mac will not buy any loan. They won't buy the loan on the secondary market at all. And so
when did you have that, Troy? Because I just refied one of my rental properties through Huntington.
Yep, me too. And I actually have 3 in the pipeline with Huntington, but they're not taking any new applications as of, I think it was either 1 or 2 weeks ago on Monday is when they came out, because my loan officer called me and said, hey, we just got notice that starting Monday, they're not taking any new apps. And so we did like all the apps over the weekend and got them submitted before their deadline. And then other lenders have raised, usually on investment properties, you're looking at paying about 2 points just because it's a different type of loan. And some of the lenders have raised that from anywhere from 4 to 6 points. So they still offer it, but they're basically saying like, if we're going to take the risk that we're not going to be able to sell this, we're going to make it so good for us that if we have to keep it, that we're going to be making a lot of money off of it.
Well, I know that Chase is doing, they won't take any apps for multifamily, but they will let you do an investment property as long as it's a single family. So they're doing it kind of by the type of house too, probably because they feel like they can offset the single family better than, the multifamily ones. I don't know.
Yeah. And I think like to Kyle's point, I have also found that, whereas with single family and condos, you typically have, it's rare that you're going to call one lender and get a drastically different rate than another lender. I think with investment properties, depending on what their business model is, you see substantial variations in rate, points, all of that stuff. To Kyle's point, if they don't have an originator that's really working on it, that knows the loans well, a lot of places are like, yeah, we haven't done an investment loan in months, whereas Kyle's guys probably, doing 90% of his stuff that way. So
Yeah,
sorry.
he's not gonna. Oh no, this is great. This is good. The other point with investment properties that comes up is you got to put that down payment based off the purchase price, and then you have to pay the rehab out of pocket if you're doing a remodel. So that kind of really eats into the cash on that. The other thing that I've seen my clients hit that people just completely forget about. I've had a client write a 7-figure check on his margin brokerage account buying a portfolio of houses, and he was paying like 1 1/8 or 1 1/4 interest on it. And you couldn't beat that on anything else. So that's another place to get money that people just overlook: home equity loans and margin accounts on the brokerages. And this is a great talking point when you get into private money and you're asking, if you're asking for other people for money, or if they're asking how they get involved. This is a good place for those people that want to lend money, but they don't know where to lend it from. This is a great option for them, especially in the brokerage, because they'll get a tax hickey if they sell stock, but they won't if they margin it. And then so they can go get a good yield on lending you money or buying their own investment properties and then refinancing them. So that's a good option for that.
So can you go back to that real quick? I obviously know what home equity is, but can you explain the margin brokerage account? Do you know?
Sure. So I've, you've got money at a TD Ameritrade account or a Fidelity account or Merrill Lynch. And let's say you've got $1 million in that in equities, bonds, whatever. You can get a margin approval on your account and go buy more stocks. You've heard about that, like when people over leverage their account by like, oh, I'm just gonna go buy a whole bunch more GameStop, and then it comes back and bites them. Well, you can also borrow against your existing assets in your portfolio by just writing a check. And so you can wire out of the account, and you can go buy a house with that.
So they'll give you a loan off of that value based on using that account as collateral? Or
Yep,
are you
yep.
actually?
So it's like it's a very simple process because they have collateral. So if you were to go default on it, they could just sell out your account and recoup their money. So this is where you get all these people that buy extra stock on margin. Like they put $100,000 in, they go buy $100,000 in stock, and they're like, I'm going to margin and go buy another 20,000. And so they've borrowed against that account to buy more stock. Well, I've had clients that they don't borrow more money to buy stocks. They borrow money from that to go buy rental houses. They take down the house, and then they go take that free and clear house, because it's free and clear, to the bank and say, hey, I've got this house. It's up and running. It's rental now. I'd like to do a cash out refi, they take that money off of that house and they go pay off their margin account or most of it.
Okay. And just so
I think I might.
so if you have 100,000 in there, are you using part of that 100,000, or are they actually giving you a loan just using that 100,000 as collateral?
Yeah, they're just giving you a loan. It's like a collateralized loan.
So that 100,000 is continuing to gain value. Hopefully it's still invested in the market. Okay.
Right. I've got a gentleman that's a money manager here in Dallas that his client, he gets paid on the assets he has under management. So this is where you can find maybe a stockbroker, financial advisor, whatever you want to call them, that kind of thinks outside the box. Some of these guys get paid on assets under management. I used to be in this business, so they get paid assets under management. Let's say they've got a client that's got a $2 million portfolio. Well, they get what they call BIPs, basis points. They get like a small fee per the amount of that they're managing. Let's say it's 2 million and they're getting like 1%. That's a good little paycheck. But if they can take that $2 million portfolio and then run that up to a $3 million portfolio by margining half of it, now they're getting paid on $3 million instead of 2. You just became their best friend by teaching them how to get their clients to go buy investment properties. Because what'll happen is you'll have a client that wants to go buy a rental house, and they're like, okay, it's $100,000, and they would go to their broker and like, oh, well, I've got to sell $100,000 in stock to go buy this house. Your smart broker is going to say, no, let's just write a margin. You can still go buy it. You don't have to sell anything in your account and get that tax hickey, but you still get to go get that house. And then it's a low interest rate. I mean, it's really low.
That's all. Yeah. Cause I've heard so many people say they don't want the tax hit, and obviously the broker is losing money too. So they're going to discourage them. They're going to talk about the taxes a lot, I'm sure.
Sure.
And that's like a win-win.
So the gentleman that I first had that used the margin account as brokerage, he was a CEO of an insurance company. And when they sold, he got a huge chunk of company stock in that one company. Well, he didn't want to get dinged by selling it. So he was just, he wrote a 7-figure check to go buy a bunch of rental houses and then took that to the bank and they refinanced them. But then after that, he's like, man, that was kind of fun. That was like a 1 1/8 interest rate I was paying. And I basically, he created his own money. And then he started lending out, we'll talk about later, hard money. So he just started using his margin account to be a hard money lender. And he was writing, 6-figure checks every week as a hard money lender and making, 12% on that plus origination points. And he was borrowing it at, 1 1/8. So the rich get richer is what it comes down to. But when you got money, you can make money easier. And that's kind of what it was in his scenario. I've learned a lot from that gentleman. He's been a good mentor of mine. Are we good with that?
Yeah, no, I appreciate it. Everybody else good?
Yeah, I like it.
It's a little different, but for the right client, that's an option. So you get people that, get homes that are free and clear. That's an option for them too, to instead of going out and get they got their house free and clear, they go get a home equity loan, line of credit, purchase a house, and then go refinance it, whatever. Commercial loans, this is kind of what most of my stuff is in right now. And these are and I may use the term commercial loan. There may be more technical terms that fancy people know, but it's portfolios, the way I interpret that. That's with the local bank, typically, that they're lending out of their own assets. They're not selling those off to the government, and they're being held at the bank. Now, since they're being held at the bank, they have a lot more flexibility on the way they underwrite them. And most, like mine, they're cool with the LLC. I don't think I have personal guarantees on them. Doesn't really matter. I've got a real low LTV, loan to value, but you can get a little bit more flexible in that scenario. The rates are going to be higher because it's not a government loan. I think I just did some at like 5%. And mine are 30-year AM, but it adjusts after 5 years on the rate. So it's just going to be, you're not going to get I get 3% forever like you do with a Fannie Mae, Freddie Mac. But a lot of them have 15, 20-year terms. and then higher interest rates. A lot of them will have balloons. Basically, they're hedging themselves so they don't get caught with a 2% loan and
So
the market
Kyle,
goes to 8.
why don't you explain what a balloon is? Just because I feel like traditional agents
Sure.
those often.
So they'll write a loan for a 30-year term amortization, as far as amortization goes. And amortization is, you're making a payment, principal and interest every month, and then it pays down over time. And then after 30 years, it's paid off. That's I've got it paid off now. Well, they don't want to hold that loan for that long. Maybe they want to hold it for 10 years, but they'll still give you the term amortization to where you're still paying it down, but they don't want to hold it for those extra 20 years. They just want to have it for 10. And then so you're still paying it down. So you're still building your equity in that regard. But in 10 years, you're going to have to refinance that or something, pay it off. So that's going to be that balloon payment, and 10 years is pretty common, at least here. It may be a little different up there.
Yeah, I think 10 to 15 years is pretty typical from my experience. Lori, do you have any commercial loans?
I don't. Nope.
Okay. Yeah, it's
but
usually
this was
5-year fixed with a 10 or 15-year balloon, like you said, amortized either 20 or 30 years, depending on, your preference or what the bank.
right. And I pretty much had everything of mine in private mortgages pretty much until a banker that'd been hounding me for a few years convinced me that we might be able to work with you, and then and he did, and it worked out really well for me. And it was nice having it in a, you don't want to have all your loans with people, like, something happens to that person, like their heirs may not have any idea what's going on, but at least a bank, I don't have to worry about that communication flow and things of that nature. But the bank I use here, they've been really good to me, is Bank OZK. It used to be Bank Ozark. They're one of the biggest lenders commercially. I didn't realize this, nationwide. They do lend in Columbus. I talked to my banker. I went to lunch with them the other day. He said they'll lend in Columbus, but the client has to be here in his market for him to lend. So if y'all have somebody up there, they'll lend where the person lives, or if the person lives there, they'll lend somewhere else as long as they're in his market or in your market. So they would lend to me in Columbus, but they won't lend or my guy can't lend to somebody that lives in Columbus, buying in Columbus, but I think he can't. So I'd look at Bank OZK. They've been really good to me, and they don't do owner occupant loans, which I thought was fascinating. Like, they just got out of the business. They said there wasn't any justification for it on their books. They've been nice though, because they're better to me than First Financial. But I don't know, any questions on it? I mean, we kind of hit that. It's kind of like your level up. So once you've capped out your Fannie Mae, Freddie Mac, so this is the next option to go to typically. And they'll do portfolios. Like, I've got 12 houses in one loan and others, and it's kind of a nice little program. Private money, this is what kept me alive for years. And this was just the terms. I mean, these are non-traditional lenders. This is not your bank. This is not your mortgage broker. This is your rich uncle. This is the business guy that retired, who doesn't want to get 2%, 3% on his bond portfolio, but he likes the idea of getting 5, 6, 7% with you on a collateralized loan. The terms are whatever you dictate, whatever y'all agree to. I used to think private money was like this invisible, what do you call it now? The unicorns or whatever that you never can find. But I can tell you from past experience, the first loan on private money is the hardest to find. After that, it just flows to you, because people find out that you know what you're doing and you've never lost any money. And every time they lend money to you, it is collateralized by real rental property assets. And you don't want to over borrow or anything of that nature. An area that I would definitely caution people is, you can get burned in this, and it can be dangerous. So you want to treat it just like a normal lender. You want to go to a title company, get title insurance, have them draw up the proper documents, make sure everything's spelt out, because you don't want to sit at Thanksgiving and you got an uncle sitting across from me. He's like, well, I think you missed 12 cents on that last payment. No, you want to make sure everything's buttoned up. But the gentleman that did the margin account, he became a private money lender for me, and it worked out great for me. And then he just kind of retired from doing it. So then I'm like, crap, now I got to go find some more people. And I was like, man, who am I going to call? I'm like, well, my aunt, I know she's sitting on some cash and she doesn't know what to do. She's just hanging out on the farm. And then, she'd kind of mentioned, I'd gotten her some rental houses. And she's like, man, I like the income, but I don't like the maintenance request. And I don't like, well, this month I get 500, but then next month I get 1,200 or whatever. She's like, man, it'd be nice if I just had a steady thing. I'm like, Susan, I can do that. If I buy the house and I just pay you an interest straight every month, she's like, Kyle, that's awesome. Do that. And then, so she lent on it was a short-term house I did. And then my mom, they talk, moms and aunts and everybody. My mom's like, well, why did you have Susan lend you money? I thought she was gonna get mad at me for borrowing money from my aunt. She's like, you should have came to me first, not Susan. So then now my mom lends, and my parents are married, but sometimes when it comes to finances, I talk to them differently. Then my dad's like, well, I got a couple of dollars set aside. I want to do it. And then I've got another aunt. She does. It's all like people start to find out what you do, and that they don't like seeing their stock market go up and down, and they don't like the inconsistency for retirement income that a rental property can be, but they love that just straight up note payment. It works, and I get the benefit of owning the rental property. So that's been a really good resource for me. And you just never know where it's going to come from. Like, you just tell people what you do. You work with people, helping them get money invested in rental properties or whatever. That's the other places that we kind of talked about this last time, is that self-directed IRAs. That's what this is. I mean, that's really private money. They're looking for places to put that money to work. There's a lot of self-directed IRA people out there that don't have someone to lend the money to. So this is, you're that person, or your client's that person. There's that opportunity to borrow money there. I know I had my wife's grandmother was in a retirement home, and it had a couple $100,000 sitting there in CDs making, I don't know, less than 1%. And my father-in-law was like, can't you do something better than 0.1%? And I'm like, well, yeah. And he's like, well, what can you do? And I'm like, well, get her, she can, be a lender for XYZ house. And they started doing it too. It just, there's a lot of people out there that have cash. Just because you don't have cash doesn't mean other people don't. And you don't know who has it and who doesn't. You just have to let people know that that's what you do. There are private equity companies that do, it's kind of a hybrid of private money. It's not really it's not a conventional mortgage. I don't know how to explain it other than I would place it as private money. And these are private equity companies that have realized this is a great place to lend money. And so I've used a couple. Vizio Lending, I've used them 2 or 3 times now, and they'll lend on rental properties. There's a lot of companies that do this, and there's some hard money guys that'll have a long-term option on their loans, but they are going to be at a higher interest rate. So like right now, your Fannie Mae, Freddie Mac's like in your low 3s, I think. These guys are going to be probably in your low 6s. But they're only going to do like maybe 65% loan to value. So you got to have equity in the deal, because they're not in the business of losing money. They're making money off of you. They tend to be kind of high on their origination points too, but they're really easy to work with. I had a house that I'd bought, fixed it up, and I was going to sell it. And I decided, well, maybe I can keep this one as a rental. And so I reached out to these guys, because they used to wholesale houses. I used to buy houses off of them. And sure enough, he funded the refinance out of hard money and did it in less than 2 weeks. And that's just, you can't beat that as far as timing goes, with a legitimate, not going to rake me over the coals rate and such. But
So
they're really good. They lend there.
What kind of rate are you looking with that versus hard money?
So this is, these are long-term. They're not doing hard money stuff. They're buying on appraised value homes. And they're doing 65% loan to value typically. And they'll come out with a rate sheet and they'll send it to you, and it's going to be based off your credit score, loan to value, debt income ratio off the property. And they'll say, oh, well, we lend as low as 4.9. But when you figure out your after all the little, it's more than a 20% loan to value, all of a sudden it comes out to like 6.25.
Okay.
It can be more, it can be less. I think the last deal I priced with them, it was going to be 6.25, which it sounds horrible in today's market, but you know what? It's not compared to what I've bought things in the past. And they're really easy.
Oh, go ahead. Sorry.
Oh, and what they'll do, their underwriting is really easy. It's credit and appraised value. They may want, I don't think they do tax documents, but I remember they asked for my banking account number, and they do I forget what they call it, but they just ding it to see if to find out how much money's in that bank account. So they want like, a few months reserve. It's super easy qualification. So if you've got a client that gets a house, but he just can't get it traditionally funded, the Visio guys are great. I mean, there's a lot of other players out there, but they've been really good to work with.
You know who else has been hitting hard lately is, I think it's called Lima Capital, maybe. And
there's a few.
Yeah, they've been advertising a hard money, long-term, like kind of hybrid model where they'll basically Lima One Capital. I'm just looking at my email here, but they basically will fund the flip and then roll it into a rental, like you said, with rates as low as 4.75. But it's an interesting, all the way up to a 30-year fixed with them. But they have a program that they call fixed to rent. So the terms are loans up to $2.5 million, 13-month construction period, converting to a 30-year rental loan up to 90% loan to construction, and then 70% loan to value, after repair value LTV. And it's,
I used to get those emails all the time, and I was scared because I'm like, are these scammers sitting in Nigeria, or are these legit players? And so I go off of references, and I know Visio because they bought a whole bunch of distressed properties back when the market tanked, and I bought a few off of them. And then they got into the lending side because it was the greatest thing. They would wholesale you a house and lend on the house they wholesale you. And then they got out of the wholesale side and just did lending. So that's why I'm familiar and comfortable with them. But yeah, I get stuff after you do a couple of deals, your mailbox will be full of them because they can, at least in Texas, they can pull the tax rolls and see how you funded deals. And then that's how they market to you. So I'm getting stuff all the time in the mail for these. Florida seems to have a whole bunch of lenders. I guess they have a lot of old people there with money that they've been able to work to get cash to lend.
So Kyle,
but no, it's great. I would not.
One other question that I had before we move on to the next slide on the private money, like the true traditional private money, like from your insurance guy or your, relative or whatever, like what are some example terms and rates that obviously you have to find what they're comfortable with, but what would you say is like average? Like, are you sometimes holding like 10-year notes with these people, or is it usually 12 to 24 months? And what do the rates look like?
It's whatever they're comfortable with. And the rule number one in negotiation is the first one to name the price loses. So just ask them, like, what are you looking to get? What are you getting right now? And then let them say, like, hey, would you be interested in doubling that? And it's collateralized, and what you're lending on is worth more than what you're lending, and then go with that. I've done, my lowest is 3.25, which is just being nice to me, in my opinion. And then but normally it's 5 to 6%, 7% I've done on like longer term. And then I've done 20-year AMs on them with no balloons typically. But those are people I know that need it. Like they just need that invested. They don't need the money back. They don't, like I paid off one and they're like, well, thanks, Kyle. Now where am I going to put the money? So what happens is it becomes like they want to keep doing it. I've had one that did a 30-year AM, but then a 10-year balloon. And that was my insurance guy. He didn't want to do it real long. And he stopped doing it because it just got too difficult keeping up with all the taxes on his income.
Yeah,
What he
10
told me.
years is still pretty good though. How do you handle, do you put that, is that like on the lender to deal with all the tax stuff, or are there companies out there that will do that? Like, how do you make it as painless
Sure.
as possible for them?
There are companies out there that service notes. And you'll find them in those self-directed IRA meetup groups because those are the guys that are they're lending. And then so there are specific companies out there that they just service notes. So they'll do all of the paperwork. They collect the payment and then they'll distribute it out to the owner or the lender, I guess, at a predetermined time. But then they'll keep up with all the tax statements and all of that. And then you don't have to mess with it. I've not used them very many times. I've used, my office manager could tell you the name because not all of them are great at it. But they are expensive. Like it may be an extra $20 to $40 a month on your payment to pay for the servicing. So that's why I don't like it very often, but I did have some private money lenders that preferred to use the note servicing companies out there. I would go offer referrals, and you can find there are people out there that broker these notes too. So I've got a client of mine in my property management book, and we manage a bunch of houses for him, but most of his business is buying houses and then selling them owner financing. And he does really, really well with it, and he services his own notes. And there's a Note Pro, I think it's an app that you can use to do this stuff. We good on that?
Yep, I'm good. Anybody else have questions on rate, term, anything like that?
Nope.
No, cool.
What I liked about this is most people don't even know that they can charge you points for originating. They're like just happy to have it invested. So it saves a lot in that regard too. On the hard money, obviously, Troy, you know what hard money is. Lori, are you familiar with hard money?
Yep.
Okay, so we're speaking to the choir on this, but if anybody's watching this video later, it'll make sense a little bit, because hard money was one of these things I always heard about, but didn't know anybody that had a experience with it, because they don't teach you this. When I was a Keller Williams agent, they didn't teach me when I was a Caldwell banker. That it just doesn't come up, but you always hear about it in like the bulletin boards and all. Like you hear about it, but you don't know anybody that's used it. So I got in an investment club here in Dallas and met people that had firsthand experiences with a specific hard money lender. And after I saw people have that positive experience and it worked and everything was legit, then that opened up a whole new world to me, because it allowed me to go buy properties that I wouldn't have been able to without, because this was before I had private money. This was hard money. This is what I had. The thing with the hard money is they're lending on the asset. They're not lending on you. So you can be completely broke, living under a bridge, and you can go get a hard money loan if the asset values what it needs to value. So typically what they're going to do is they're going to take an ARV, an after repair value for a property, and using a simple number, if it's worth $100,000, once it's fixed up perfect, and that's what it would potentially appraise for. In my market, they'll typically lend 75% of that number for you to buy it and fix it up. Now, if it costs more than that, that's out of your pocket. But I've been pretty fortunate in getting them low enough on the purchase price to not have money out of pocket. And on some properties, I'll use the hard money and then I'll have somebody that's got an extra 20 grand that wants to lend, and I'll have them foot the extra 10,000 or 20,000 for the rehab. And then I have no money in it and everybody gets paid and everybody's happy. The interest rates are obviously much higher. 12 to 14 is kind of what a newbie is going to pay. It gets lower. Like I typically pay, if I'm using traditional hard money lender that I've got in town, they charge me 9.9%, which is after you do enough or they know that you're got experience, and that's they're open to that. Plus, it's hard money is a very competitive market now. A few years ago, there weren't that many hard money lenders that I knew of. Now there's one on every single corner they'll broker hard money. The terms are shorter. Most of the guys do 6-month terms, and then if you need to go farther, then they're going to charge you to extend it. There's guys that'll do 1 year without having that issue, but most of them seem to be 6-month terms. They're interest only and they're balloon, so that after that 6 months, you're paying it all off. It's either you pay it off or they get the house. They don't want the house. They never want the house. I mean, that was the thing that it took me a little while to get over. They're not trying to get the house. They're just trying to place money. They want their money to work. They don't want to have a house. You know, if you foreclosed on them, all that, that's an expense they don't want. And so my experience with them has been they want to help you be successful. And my buddies that are hard money lenders, which I network with these guys all the time because they're good referral partners for me in my property management business, in that they'll have wholesalers that are bringing them cheap houses so they can lend on them. So some of these guys already have the houses. They just need somebody to raise their hand to borrow the money. They also have a lot of times contractor relationships. They're like, hey, we've funded a bunch of deals where this guy was a contractor. We're comfortable with him, and they'll point you in that direction. They can close super, super fast. You know, I'm like 3 days is not abnormal here. Title works very simple here. I don't know if Ohio title works real quick or easy. I don't know. I mentioned they can be a good mentor. They can be a real good referral partner for real estate agents too. Let's see, money, it is less money out of pocket typically, but a lot of times they want to know that you have resources. So they may want you to have 30,000 in a bank or access to 30,000. Not always. Sometimes they do, especially with a new person. They're going to want to make sure that you're able to weather a storm. Some of them will defer payments. Some of them won't. Some of them want a monthly payment. Some of them don't care. I mentioned it. It all depends on the property, and you can, if a perfect storm, you can purchase the property, rehab it, and everything, and not have any money out of pocket. And I know that hard money seems really, really expensive, and there's all those people out there that say, I would never borrow money at 12%. I'd never borrow money at 12%. And you know, at first you'd say, yeah, why would you borrow money at 12%? But when you do the numbers, you can see how it works. And I've got an Excel spreadsheet where I'll kind of show you a scenario where you use hard money and you don't use hard money. I'll show you that in a minute. So the 2 times that really work for hard money lending, in my experience, and I'm sure there's people smarter than me, is fix and flips. That's the people you see on TV that go buy a junker house, fix it up, and they just sell it, and they're going to make the spread. The other ones, and if you are big on Bigger Pockets, which is a good website to learn about real estate investing, the BRRRR method, where you buy, you rehab it, you rent it out, then you take it to the bank to refinance, and then you just do it again. And you'll end up with less money out of pocket than if you just buy, fix it up, and rent it out and drop out the hard money option. So this I have here to remind me to show you the spreadsheet. Let's see. Okay, I clicked on the page, I clicked shared, and it's not popping.
Yeah, I was seeing it.
Let's
Yeah.
try this.
Your spreadsheet.
Oh, you saw my Excel spreadsheet? Okay.
Yeah.
Okay. It didn't pop up on my screen like it did last time. Okay, so you can see this?
Yep.
Yeah, if you could zoom
here?
in at
Okay.
all. It's a little small.
Okay, yeah. Yeah, sorry about that.
Perfect.
Is that good?
Yeah.
Okay. So this is an Excel spreadsheet that I stole off of somebody that's way smarter than me, but the numbers work. And this is how you can, and this is what I do when I do wholesale a house. If I'm getting it under contract, I'm like, I can't take this down, or for whatever reason, I'm going to get this to a potential client, let them take it down, fix it up, rehab it, and then I'll make it a rental property for them. I'll typically do a PDF version of this, so they kind of know what the expectations are on a deal when they're buying it. So these are make believe but realistic numbers. You know, if you found a house that when it's fixed up, like all the other houses in the neighborhood, that's good, clean, pretty, let's say it's $200,000 value at the end of the day, we call that the ARV, after repair value. And then if you're able to get that for 120, people say you can't find deals, but they are absolutely out there. There's people that I've bought distressed properties from real estate agent referrals that didn't think that they could list it for sale, but they just thought they just have to dump it to somebody to pay cash. Like they didn't understand that you actually list it for sale. So I bought insane deals off of real estate agents because they just, I can't list this. I'm buying this guy a house, but he can't buy it until he gets this one sold, and it's too ugly to list. I can't list this. I bought a house last year off of that. It was the craziest thing. And I'm like, all right, I'll buy it. And I did, and made some money. And the same thing the year before, it was a new agent that was buying a new build construction for a guy that had a house that was rough. I mean, it had some foundation probably. It was rough, but it wasn't bad, horrible. They could have listed it. But what I was able to bring that agent was I was able to close on the house the day they needed to close. And I was able to provide them a for certain close where they didn't have to worry about meeting appraisal. They didn't have to worry about conditions. I wasn't going to ask for them to replace a breaker box or anything on the house. Like I'm buying as is, where is, with all defaults, and I'm closing on April the 9th, period. No ifs, ands, or buts. So there's a value in that you're bringing to the table. Don't discount that value you're bringing to the table, because people want a quick, easy close. And if it's 20,000 less, you're not stealing 20,000 from them. You're able to get them out quicker. They don't have extra payments. They might have to do all these things based off of an inspection. They don't have the ability to do that. You're helping everybody. And there's guaranteed there's other people bidding on the house too. So it's still going to go for the highest cash price it will. So I just put some example expenses that they may have. Repairs, I just put like $35,000. It's not a crazy rehab. That's not a cheap, but it's not crazy, but that's a realistic. So that would be picking it up for 120, putting 35 in it. That's 155,000 in it to make it a $200 or $200,000 value home. I put some make-believe tax, insurance, and potential rentals in here. We can do 1,700. And then I just put some of what the loan, the formula inputs that you would need. If you're going to do a traditional, it's probably going to be 20% down. It's going to be a 30-year term. Let's say it's 3.25. Let's say they charge you $3,000. And then if you're doing hard money, let's say they do 75% loan to the value, the after repair value. Let's say they're going to charge you, this is title, lender, everything. I just put $6,000. Let's say they're going to charge you a couple of points. You're going to have some other just expenses. That's high, but we'll just say that for giggles. Interest rate, let's say it's 12%. That's not outrageous in today's world, but it's not a deal either. You can get down to 10 for a hard money loan. And this is going to be interest only. And I put that it takes 3 months to be able to refinance that. That'd be, you bought it, you closed on it, you put your contractors in there, they worked on it, they got it all perfect. you're going to put the refinance paperwork app in the day you close, and then you're just going to wait for the appraisal to happen after you're finished. So that's the thing, is financing, at least lately here, it's taking a lot longer than it used to. So even if you had that house fixed up in 30 days, you wouldn't want to start your refinance app after 30 days. You want to start it before then and just wait for the refinance appraisal to happen when you've got it fixed, so that you don't sit in that 12% interest rate any longer than you have to. Up that you can roll the fees in, and this is going to be a fix and rent. So let's say it takes 15 weeks to get the thing rented. That's after you initially purchase it. So you're rehabbing it, all pretty. You found a good tenant, they're going to move in. Let's say it's 15 weeks. That's a long time. At least here, that's a very long time. And the terms that you could refinance that on, let's say it's an 80% loan to value and 30-year term, let's say 3.25 rate. And let's say the fees are $3,000. So if you scroll that up and you just look at what that would be to a person that just paid traditionally, this is what I used to think everybody bought on. Like, this is your traditional, I'm a real estate agent, I got somebody that's going to buy a house, fix it up, and rent it. This is what I used to think I had to put them in, as a conventional loan from a Wells Fargo, Bank of America, Chase Bank, whatever. So what they would have to do is they'd have to bring the down payment of $24,000 to purchase it. That's going to be 20% of the 120. They're going to have their closing costs, and then they're going to have to pay that rehab out of pocket, $35,000. So they're going to pay $62,000 out of their pocket to just do this deal. Let's buying it, fixing it up, and their mortgage is going to be $96,000, which is that's less than 50% loan to value. But the cool thing is you can kind of see what works here. Is that's a great return. I mean, you're getting a $41,000 unrealized capital gain. You got annual cash flow with your rental. You're getting $832 a month, so it's $9,900 a year. Your return on capital is 67%. Your cash on cash return of 16%. Cash on cash is like, how much money are you going to get in return for what you invest? And when somebody says, "Oh, I went and bought a CD at XYZ Bank and it pays me 1%," they're getting 1% cash on cash returns, the way I interpret that. 1%. And I have elderly people that are like, "Oh, well, I'm too old to buy rental property." I don't believe that, because you're too old to get 15 times what you're getting at the bank. That doesn't make sense to me. Who cares about the house? You're not buying a house. You're buying 60% on your cash. That's what you're buying. And you tell people that, like, I'm not buying you a house. I'm buying you cash flow. And it's 16% cash on cash return. That's great. I mean, I don't know why anybody would piss on that. So anyhow, so let's go back on what it would look like with a hard money. I know I'm not supposed to say pissed. I'm sorry. Hard money.
Sure.
If you used hard money to take it down, it's the same deal, but you're borrowing at like crazy interest rates. And this is the part that people have a challenge wrapping their mind around, because you've been taught your entire life. Dave Ramsey tells you, don't borrow money, don't pay high interest rates. 12% is nuts. You're being ripped off, taken advantage of. The person that lent the money should go to jail. Like, that's what they teach you in all of the who's it, what's it's on the internet. So same deal. You bought it 120, still have 35K you need to put in. So what you're going to do on this scenario is you're going to need, looks like $10,000 out of your pocket. Let's see, max loan. Well, okay, we'll go through it all, but you're going to need basically $10,000 out of your pocket to purchase it. Is my reading right? I did this last night.
Well, usually, Kyle, don't
Yeah.
you're usually going to need some money out of pocket. I mean, at least a lot of the hard money, your people loan you 100% of the initial investment. A lot of
Mine
them
do. So what my guys will do 75% loan to value, and then the rehab, you're going to rehab and then they'll reimburse you. up to 75% of the
Okay. A lot
total.
of the ones I've been seeing lately just in my inbox have been 90. So they want 10% of the initial purchase up front,
Mhm.
and then they'll give you back up to 75% of the ARV.
Yeah, I mean,
But
there's
you're
going to be those
getting,
guys, but I think I'm in a very competitive market where lenders are they're having a tough time lending out money. And I've got guys here all day long that'll lend 100%. Jet Lending's a big one in Texas that does it. Investmark Mortgage does it. I've got a group out of California that brokers, and they do 100%. So talk around, you can completely get 100%. Now you may fund the first draw payment out of your pocket, and then that's to pay the contractor to do the work. And then you submit them photos, or they send an inspector to go check it out, and then they'll wire you the reimbursement. So if you bought it, you took it down, you rehabbed it using their money, and you refinanced it, you're going to have a loan. Where's the refinance? So your max loan's going to be 80% of that 200,000. So it's 160K. And your max hard money loan was going to be 150. So in this regard, you're going to have 11K that you're going to need to have. But then the refinance, I'm sorry, I'm drawing a blank, man. So your loan payoff, $150,000 on the hard money, but the bank will loan you 160. So there's a difference there. So if they were giving cash back at closings like they used to in 2008, you'd get $600 back at the end of the day after you've paid 11.4 earlier on. So
Right.
On this one, you're getting a cash on cash of 62%, and your return of capital, because you have so little in the deal, because you're not getting it back out. This is what you're gonna have that full 11 still in it. You used to be able to get this refinance, but you can't now. So, I mean, I can't complain. I mean, you're getting 2/3 of the cash flow that you used to, but you have a fraction of the money invested. So if somebody if you have a client that comes to you and has $100,000 for down payment on a house, they could go do one traditionally, or they could do several using a hard money option.
And Kyle, you can actually still get, I mean, I still do it. You still can get cash out refis on an investment property. It just requires 6 months of seasoning. So you wouldn't refi that, but you could, like you're saying, you could start the loan at month 3 with it closing on, 6 months and 1 day. Obviously, if you're working with a hard money lender, you probably want to try to get that 12-month term instead of the 6-month term if that's your plan. But in this scenario too, I don't know if 3 months
Carrying cost
is worth $6,000. Probably not.
Yeah, probably not. But I mean, I know Banco ZK, you got to hold it for a year before they'll do a cash out refi on something. But
Okay.
that's the guys that I know. Now I don't know rate.com and what they charge.
Yeah, Fannie Mae and Freddie Mac only require 6 months. So if it on a just traditional loan, you can refi, like you said, right away, as long as you're not taking out any more than your initial purchase price.
Now I do have a client of mine that is he's a big mortgage broker. When I say big, like he's one of the top in the country at his company. And what he does, he's got a good portfolio of rental properties, and he takes down and he uses hard money, but he is his own hard money lender. So what he does is he uses an LLC to lend him money, so that what he can do is he doesn't have those rates, of course, he has to pay, but he's lending himself the money from an LLC that he controls, or his wife, I think it's him. And then he's able to refinance out his $150,000 rehab loan back into that LLC. And then he gets all the benefits of a hard money loan without the interest rate. And then he just keeps doing that over and over and over. That's a
that's
little
pretty
loophole he's been using. He's the only one that I've ever seen doing that, and he teaches a class here in Dallas on doing that.
So what's the biggest advantage to, there's got to be, I'm assuming tax wise, there's a big advantage to that. Like what would
For
be
him
the
using the
advantage?
LLC, the advantage is
Yeah.
he doesn't borrow money. It's him lending. It's him using his own cash. So instead of coming over here using conventional and paying $96,000 out of pocket and having the rental property, now he is his own hard money lender, and then he can refinance that out in that short period of time. He doesn't have that holding period that he would have to otherwise, because otherwise he'd have to hold it and refinance cash later.
Okay.
So I think it would be the seasoning. He gets around that seasoning option that way.
Are you able to share the spreadsheet?
Sure, I can email it to you.
I mean, of course I could create it, but you know,
Mhm.
you can save me some
Well,
time.
There's no point in recreating something somebody else has already done, because I stole this from somebody else. And I've got a lot of different versions. I have different versions, but this is the one I like the most.
I like the cash on cash return calculations and all that stuff. That's really nice to have relatively easily with just a few numbers. Lori, I'll shoot it over to you too once he sends it to me.
Yeah, sounds good. I built myself one, something similar, but it doesn't have any of it doesn't have the hard money comparison in it.
Yeah. Cool.
Yeah, I can, it doesn't take me a second to do that. What was the name? I'll send you that PowerPoint too. I don't know if it's not worth copywriting. So
Well, I'll send you,
there you
I
go.
sent
There,
you,
send you.
right? To your last one, or did I not send that to you? Did you get the link to the
I
last
don't
one?
know if I got that one or not. I don't know if I got that one, but yeah, send it over to me.
I'll send it. Cool.
Oh, I think what it was is I don't think I was able to open it. Was it in
Do you
Google?
want the raw, do you want the raw footage or do you want the YouTube?
Oh, just the YouTube link would be good.
Okay, I'll send you that. Cool. Is that everything?
Yeah. Yeah, I mean, there's a whole lot more. I just don't know it.
No, this was
Okay.
awesome. I mean,
That's good.
this is definitely more, I don't think I've ever seen somebody take all the options like this and put it into one presentation. I'm sure somebody's done it before, but I really appreciate you taking the time to put this together. And like I said, I think this is going to be something that's going to be watched a lot of times by people after the fact. I'm surprised, like Lori said when she got here, I'm surprised there's not a lot more people here. So,
Well, one thing y'all could do if you like it, if you could go out and review me on Google My Business or on Bigger Pockets, I'd appreciate that. That'd be
all right.
nice.
Where do
If you find value in it.
Where do I send that invoice, Kyle? Because
You're
I
right.
get paid for that kind of stuff. I'm a big deal.
Yeah, well, you helped me get into business. It was a long
Ow.
time ago, but you helped me get into business.
Man, you
and,
doing this?
you
doing this is payment enough, my friend. It's always passing it on.
Well, this is fun stuff. Getting to talk real estate's fun. I don't get enough opportunities on that, so
Yeah,
it's fun talking real estate.
absolutely.
And most people won't listen to you. Most people tune you out as soon as you talk about how you fund something. Like they would. That's why people aren't on this one. Everybody wanted to listen about, how I get clients. Nobody wanted to talk about how do you find your clients money or you money.
Yeah. Well,
That is not, it's not as fun.
anytime you want to talk about it, you just give me a call. I'll listen. I'll Lori in too.
Yep.
Yeah, I'm curious on your other classes you do too. I'd be interested in listening in.
Yeah, definitely. One thing I want to get a self-directed IRA guy on here, just because I think from a private money perspective. And then I'd love if you have anybody, Kyle, that you feel like could benefit, even if they're down there in Dallas, to talk about that margin brokerage account. like I
Mhm.
said, even if there's only a few of us on and they'd be willing to do it, I'd love to hear more detail about that, because I think, if you're able to explain that to somebody, I think, if you're able to have a few ways in your pocket that somebody could lend the money to you,
Mhm.
there's chance to get a lot more.
I'm going to
Yeah,
contact a couple of the ones I know soon, because I want to pursue that avenue as well. I think that's great.
Yeah, I'd never even thought about it until one of my clients was doing it. And then I didn't give a whole lot of thought to it until I had a buddy, because I used to be in the industry. He went off to a big money manager, and that's what he was sending me clients. He's like, yeah, go buy this guy $1 million worth of houses. He's like, I make more money. And I'm like, all right, let's go to it.
Yeah. I like the idea, like you said, of going and seeing how we can turn it into a win-win relationship.
Mhm.
And it's
And
probably
the client wins too.
Yeah, one of those things that probably many brokers don't really understand that well. And so if you can bring them a way to make more money for themselves, it could definitely be a win-win.
Yeah. Yeah, those brokers, they are salespeople. They are not money managers like they say they are. They are salespeople. Like they're just there to sell stuff. So if you can help
Yeah.
them, they'll listen.
Yeah, that's awesome. Lori, did you have any other questions for Kyle?
I don't think so. No, this was good. I'm glad I sat in.
Okay.
Well, thank you,
awesome.
Lori, for showing up.
Yeah.
You get all the points for today.
Yes.
Anybody. All right, awesome. Well, you guys have a great day. And Kyle, thank you again so much. And I'll shoot these links over to you here momentarily.
All right. Well, I appreciate it, man. You'll have a good one. Go make a lot of money.
Good seeing you, buddy.
Thanks.
All right, you too.